Hey, welcome everybody. Welcome to the Closing Beat. Happy Thursday and a holiday shortened week. Hope you're having a great day so far. If you've never watched this before, this is our stock market update video. We just do a real quick show to give you the good, the bad, and the ugly, how the broad-based indices did for the day, how some of the sectors did for the day. We talk about individual stocks and their performance, and it's earnings season, so we're focused on a couple interesting things today. We're financial advisors, and tonight what we're doing for our customers, I can promise you, has never been done before, at least how we're going to do it. Well, it's never been done before. The wine and wealth class that we're going to do for our customers on exactly all the geeky stats, exactly why you should contribute to your retirement accounts in a weekly basis versus monthly. And we're stepping up our game here, so it's going to be very, very interesting. I'll keep it really short. Also, next Wednesday, we've got the dojo coming out. It's our video library, every class we've ever done, and so much more coming up there. So next Wednesday, we'll be releasing that to everybody. Well, if you're not one of our customers, you could care less, so maybe you'll check us out. But if not, you're here for the show. Off to the your right-hand side there, you can see the markets, again, mixed today. Man, you know, just not really getting anything done. Now, that makes it interesting because you got the Dow down 22, you got the S&P up 3, Nasdaq had a good day, 47. But what happens here is one side of the field is going to say, oh no, we stopped going higher, right? The other side of the field is going to say, hey, we're not going lower, right? So there's this little tug of war going on right here where people that want the markets to go higher are getting concerned, people that want the markets to go lower are getting concerned, and that's very normal. Now that will resolve itself because next week earnings season is really busy. A lot of companies reporting their earnings, and then of course the week after will be the busiest week of earnings, so get ready, hang on tight. What I would say here for the overall markets, if we just go over to the charts, this is the S&P 500 for the day. Well, not for the day, but this is a daily chart of the S&P 500. We've hit an area where people are waiting to see what happens next. If you've seen our candlesticks classes, if you're one of our customers, by the way, that'll all be on the dojo coming up for you. But you know that the last 2 days, those candlesticks or that price action over the last 2 days tells you we need more information. Right? Investors will go, okay, great, it's fine where we're at, but I need more information. And so that's what you have on the S&P. You have almost the same thing on the Nasdaq, just chopping around back and forth over the last 2 days, and the Dow also doing the same thing there. Now, the good news is, market-wise, you had 2 stocks higher for every 1 that was lower. That's the easiest way I can say it for today. So what that lets you know is, obviously 2 stocks were higher for every 1 that was lower, but it lets you know that the market's just kind of catching its breath here. So if you wonder if you missed anything today, no, you absolutely didn't miss anything, except for what the Commerce Secretary said. Did you see Wilbur Ross, the Commerce Secretary, tell people to go get loans from banks that then would be backed up by the federal government? People shouldn't have to be bothered with that nonsense. The government shut down. They can't seem to work things out. Why should the individual have to go to a bank and get a loan for that? Unbelievable. So he's getting a little grief today, probably as he should. We all say things from time to time maybe we shouldn't have said, and he's paying the price for that one. Anyways, check it out if you missed it. Okay, sector-wise, semiconductors. We haven't talked about them in a while. Semiconductors, come on, there you go. Best day in over a year, added almost 6% on the day. You got help from Lam Research, which is symbol LRCX. We talked about that yesterday. You got help from Texas Instruments, although they guided lower. Their earnings were beat and everything, but they said going forward they expect a little weakness there. And you had Xilinx was the other one there. Also in the semiconductor space, all great earnings. If I go through and look, XLNX, we talked about it yesterday after the on this show. Great little blast off to highs. LRCX also almost back to the 200-day moving average. And Texas Instruments almost 7% on the day, breaking above the $100 number. So add all of that together, you got these big players here in the semiconductor space. And hey, you got a recipe for a rally on the day that was bigger than any other rally for the last 52 weeks. So really good there. Oops. There we go. Consumer staples, a little bit of a weak spot today, down about 1.25%. Consumer staples are stocks that you use, or companies that you use regardless of the market environment. So if you're not familiar with what this is, the ETF I'm using is the XLP, and inside of that are products like Coca Cola. People will drink Coke, whether the economy is good or bad. Procter Gamble, people will use their products, their soaps and all that, their medicine and all that stuff, whether the markets are good or bad. Well, today you had Coca Cola, Pepsi, Procter Gamble, in Davos talking about how they're going to reduce the plastic waste. Obviously, they all make products that are just filled with plastic there. Investors are a little concerned about that because what's that going to cost, right? I actually saw a bottle that was biodegradable and everything, but I guess the cost is so high that investors worry about the sort of cost to make that transition that's environmentally friendly. That's the big moral dilemma, right? If you're invested in Coke, Procter Gamble, Pepsi, any company that uses plastics, obviously you want the greatest return as possible, but do you want plastic filling up the world? So that's what they were talking about there. And so that held back this sector a little bit today. Coca Cola, Procter Gamble make up over 25% of the consumer staple sector, but it still has a gain of about 2.25% on the year. So a little bit of give back there today. I don't think it was that big of a deal for a one day to pull back like that. Transports a little bit higher today, so you got just over 1% erasing all of yesterday's losses. If you're not familiar with the candlesticks, you can still kind of see we were lower yesterday, and today we erased all of it and kind of basically finished where we started yesterday. So a complete back and forth there. You got strong earnings performance from the airlines, right? Let's cover them now. All the airlines that we talked about yesterday reporting earnings: American Airlines, Southwest Airlines, JetBlue, just to name a few. Actually, did I cover all of them? Oh, Alaska Airlines came out with their earnings. And so great support. If you dig a little deeper and you just kind of like this stuff, you also had the rails a little higher today. So Norfolk Southern, one of them that stuck out to me and continues to stick out as a bit of a stronger name there. Year to date, transports up still by 7% and continue to play catch up relative to the other sectors if that's something you participate in. Okay, that's the broad-based indices. That is the sectors. Let's go on to individual stocks. And today, I'm pretty much going to focus on airlines. Southwest Airlines beat earnings more than expected, $1.17 in earnings versus $1.08, which is everybody was expecting. Revenue better than expected. They said that even though the government shutdown would slow them down a little bit here in January, they still guided higher. They expect a great 2019, so the stock was higher by 6.25%. That's LUV if you're not familiar with these ticker symbols. American Airlines, AAL is the symbol. It's the worst performer out of all of them overall. So if you were to compare like the last 12 months of some of the other airlines relative to American Airlines, it's one of the worst performers there. Earnings came in at $1.04 versus $1.01 expected, so better than expected by 3 cents there. Revenue's better than expected, and the company also raised their guidance for 2019. Oil prices naturally helping out just a little bit there. Everybody seems to love JetBlue. That stock was higher by 5%. Reported earnings better than expected, I believe by the widest margin relative to the other airlines, so they sort of stood out just a little bit. Revenues, basically what was expected there, and guidance, they didn't really change a whole lot. It was basically as expected, which is positive, by the way. And if you look, zoom in for you. If you look at from the beginning of December, you got this whole sell-off here. What just happened? Since that time, we've now recovered just over half of it. So a positive sign if you're more of a technical trader or you like trying to gauge the mindset of investors out there. Not too bad. PCG, you're likely going to see that in the news. A 75% rally today. Don't look at this and go, oh my God, I missed out on 75%. No. So basically, out of the wildfires and all the issues over there, who was it? California, I forget who it was. The California agency that was looking into these wildfires said those Tubbs wildfires was actually not the fault of PG&E, and so they're off the hook. They actually blamed one homeowner's equipment for causing that. So if you're one of those conspiracy people, do you think like they put the fall on the one homeowner because it's better than putting the fall on the company? It's kind of a fun one to look at. You know there's people out there that kind of go for that stuff. I don't know. I watch I don't watch a lot of TV, but I have watched a lot of Scandal and Blacklist. Blacklist is my favorite show ever in the history of TV. And so I wouldn't be surprised if there was something going on. I'm messed up like that. I watch too many of those shows. Intel, by the way, 4% higher today. They just reported after the close here. No, I'm sorry, lower after the close here, down 6%. It was higher today by 4%, but after hours it's down by 6%. So completely giving it back. They missed on earnings. They beat on earnings. They missed on revenue and lower guidance going forward for the full year. So not good there if you're an Intel investor. Starbucks reported earnings as well. Revenue beat, earnings beat, sales beat, China sales beat. So they're doing well there. Everything seems to be pretty good for them. The stock's only higher by a little bit. I think a lot of the action sort of was figured out earlier in the day by what Starbucks said, but they raised their guidance. All seems to be good. They added like 570 something stores net, between the ones they closed and the ones they opened. So a lot of that in China, and they're growing. I mean, so not a lot bad to say there. E-Trade, they also just reported. They're lower as well. They missed on earnings. Looks like TD Ameritrade stealing all their business. It's down to about 47.50-ish. Actually, I might be disconnected here. I don't know if that's accurate. But all in all, that's basically the stock news for the day. Hopefully that helps you. If there's any questions, maybe I can answer those. Intel, yeah, 6 or 7% after hours. Yep, that's it. I hope they do. I think that I think there has to be something better than plastic, right? For these Coke bottles and things. I mean, we can do so many cool things scientifically. Why can't we come up with something better? They have a tire that doesn't go flat, that never loses tread. I don't know. Why can't you do something interesting with bottles? We'll see what happens. Perfect. Okay, well, that's all I have for you. Hey, if you're one of our customers tonight, I can promise you it's going to be something you've never seen before. So when I give people suggestions here, when I give you advice, it's always based on fact. I won't use my opinion because it's just my opinion. What good is that? Tonight, specifically, why you should, we're going to do a 24-year study. No advisor has looked back like we're about to look back with all the data that we've used on this one. So if you can't make it, it's fine. I'll keep it short. It'll be recorded, but it's something you want to check out for sure. So be sure to be there. All right, thanks for watching, everybody. That's all I have for you today. I hope you have a great rest of your day. If you're not a customer and you found something interesting here, maybe you'll hit the subscribe button. Be nice, leave a nice comment or something. Let us know you care. It's interesting. All right, see you guys later.
Hey, wait! Before you go watch one of our other great videos, have you had a chance to see our new FinTips videos? They focus on one topic at a time, covering investing, personal finance, and anything that can quickly help you with your dough. Best of all, we'll keep it real short, because we know time is money.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.